This TradingView indicator delivers incredible results with no lag. Take this sell setup, for example. We entered the market using our proven price action technique. Here's another great buy setup. In this video, I'll walk you through everything you need to get started. We can also see this additional buy setup, using the same price action strategy combined with the indicator. Now let's get started. To get started, we first need to add the indicator to our TradingView chart. At the top of the screen, you'll see the Indicators button. Click on it and search for Zero Lag Trend Signals by Algo Alpha. Once you find it, select it, and it will appear on your chart. Now, let's adjust the settings of the indicator for optimal performance. To adjust the settings, first click on the Indicator's settings icon. In the Inputs tab, make sure the values match what you see on the screen. Then, go to the Style tab and ensure it looks exactly like the setup shown here. Now that we've added the indicator, let's dive deeper into the settings and explore how we can use it to trade effectively. Traders, this indicator works across all markets, including the Forex market, stock market, cryptocurrency, and indices. It's also versatile enough for both scalping and day trading strategies. When the indicator pop-up turns green, it signals that the market is bullish and will only be looking for buy positions. This is also confirmed by price trading above the moving average. On the other hand, when the indicator turns red, it means the market is bearish and will only look for sell positions, with price trading below the moving average. Another powerful feature of this indicator is the multi-time frame signal table. It displays different time frames and their current signals, giving you a clear idea of which time frame you should focus on. One important thing to note: if the indicator shows that both the 5-minute and 15-minute time frames are bullish, that's a strong confirmation that the market is strongly bullish. The alignment of multiple time frames adds extra confidence to your trading decisions. Let's take a look at a few examples. In this example, using the historical chart, we can see that the indicator gave us a green bar, signaling that the market is bullish. That means we're only looking for buy setups. Shortly after, we notice a price rejection at this level. This gives us a perfect entry opportunity. We enter the trade and place our stop loss just below the low of the rejection candlestick. From there, we hold the position aiming for at least a 1 to 3 risk-to-reward ratio, or even more depending on market conditions. Now, let's take a look at a couple of sell setups. On the chart, we can see the indicator gave us a red bar, meaning the market is in a downtrend. So, we're only looking for sell trades. For the first trade, we notice a price rejection and enter the market, setting our stop loss just above the high of the rejection candlestick. Then, we see a second trade setup, another price rejection confirming the bearish trend. This time, price even reaches a 1:10 risk-to-reward ratio, which is an amazing result. In both trades, we're aiming for a solid 1 to 3 risk-to-reward ratio, but with the second trade, the market really delivered a strong move. Now, let's look at the third example. Here, the indicator gave us a red signal, suggesting a bearish market. However, we didn't see any price action to confirm a clear entry. In situations like this, it's crucial to stay patient and wait for the right confirmation instead of rushing into a trade. Remember, trading is all about waiting for high probability setups. Overtrading can lead to mistakes and, ultimately, blowing your trading account. Patience is key. In the fourth setup, we can see that the market was really strong, as shown in this historical chart. After the indicator gave us a sell signal, we identified 2 excellent sell setups. In the first trade, the market gave us a solid 1 to 4 risk-to-reward ratio, which is a great result. But what's even better is the second trade, which delivered a 1 to 6 risk-to-reward ratio. That's a phenomenal trade. These examples highlight the power of waiting for the right setups and being patient. When you align with the market's strength, you can really take advantage of those high-probability opportunities. In this next example, we can see that the indicator is giving us a sell setup, but there's no clear price rejection visible. In these situations, we can use another price action technique that helps us identify valid entries like this one. If you're interested in learning more about this technique, drop a comment below, and I'll share the PDF with all the details. That's why, in this chart, even without the obvious rejection, we were able to take the sell setup and achieve a 1-to-3 risk-to-reward ratio. Now, let's take a look at a bullish trade example. In this case, the indicator gave us a green signal, and we identified a strong entry opportunity using one of our most powerful techniques that we apply every day. This technique helped us capture a 1:10 risk-to-reward ratio, which is an exceptional result. It demonstrates how combining the right strategy with the proper market conditions can lead to huge returns. This is exactly why we rely on these proven techniques to guide our trades consistently. Here's another example, using the same price action technique combined with the indicator showing a bullish signal. This time, we had a small stop loss, yet the trade gave us a solid 1-to-6 risk-to-reward ratio. This shows the power of combining tight stop losses with strong setups. And always remember, it's crucial to take profits at the right levels and lock in gains, no matter how confident you are in a trade. In this last example, we can see that the confirmation came a bit late after the indicator gave the signal. Despite that, the trade still resulted in a solid 1-to-4 risk-to-reward ratio. And with that, we've reached the end of the video. If you found this helpful, don't forget to subscribe and leave a comment below. Thanks for watching.